morning, UPBOptionMillionaires.com on this Monday, April 15, 2019. Market's going to open in about 20 minutes after this video is uploaded. If you look at the S&P 500 futures flat, the overnight session, one of the more quieter overnight sessions that we've seen in quite a long time, actually the smallest range of all of 2019 in the overnight hours. When you see a quiet, sideways kind of consolidation phase, we've seen it numerous times here over the last couple weeks, sideways, move to the upside, sideways, and most recently, a very flat, mundane session in the overnight hours. Thursday led to some upside into Friday's session, a move up to highs that we haven't seen since October. So this sideways action is just a digestion of the recent move. I think heading us up ultimately to what I've been saying since January. New all-time record highs here for the S&P 500. You can see we're only 30 points away here on S&P 500 futures. A nice bull flag starting to break out. And this inverted head and shoulders pattern really playing out nicely for the market. The VIX tapping levels we haven't seen since October of last year. We tapped under the 12 level into the close on Friday's session. We're pulled back up here. We're up 2.5% here this morning, but still very muted levels for the VIX. The fear index, that fear that was really tangible at the start of the year, the end of 2018, it's gone now. It's gone, yes. Look at the VIX spike. And again, I've talked about this, all these VIX spikes to the upside since the lows in March 2009. Look at these wicks, just wicks in the wind. All we are is wicks in the wind. And I talked about it in my videos and some of the posts that I did back in January, that ultimately we're going to revert back to what we've seen historically of the low teens, the 10, 11, 12 level for the VIX ultimately. And we're going to get these pops to the upside, get the bears out of their cave. But ultimately this market is heading higher. And the reasons that the bears cite for why this market's going to crash continues to be reasons why it's going to continue to head higher. Some of the noted economists are out. I saw an article this morning talking about why to be so worried about the market is the exorbitant amount of debt that's out there. And again, as long as interest rates remain low, that that debt will remain serviceable. The market's going to continue to grind to the upside. And you see any kind of attempt to move to the downside gets reversed rather sharply. We had that big quarter to the downside at the end of 2018, recovered, and now we're almost back up to recovering all of those losses. And what's going to happen next? See that big round 3,000 number. That's what's looming ahead for the S&P 500. Actually, look, the SPY had a nice call sweep a couple weeks ago for the over 300 level for the SPY into May. And certainly at the rate that we're going here with consolidation moves to the upside, that's certainly something we could see in the short to medium term. If you look for the SPY, let me just pull up a chart of that Apple, but the SPY from a longer term perspective, and I was talking about this too at the lows, the momentum shift. We had this back in the end of December 2015 and also the start of 2016 where the market was pulling back significantly. And at that time, we had a very negative sentiment for the market. It actually marked a great buying opportunity for the stock market. And it also marked, we had this great momentum shift. See that little green arrow down there? Well, guess what? Had a similar type scenario here. We were pulling back. The growth story was over. The market was going to crash heading into the Christmas Eve 2018. And we get this nice little buy momentum signal. Well, here we are. We recovered almost all of those losses, just like we did back at the lows in February 2016. And look what the market did ever since that point there. A really sharp rally, 100% to the upside. Is that what we're going to see? Either way, certainly upside lies ahead for the market, despite what you hear from some of these uber bears. And the irony is the uber bears is like, oh, the bulls are getting trapped. It's another bull trap. Well, who's been getting trapped really since the lows of March 2009? Has it been the bulls or the bears? And the irony is the bears come out and talk about the traps when the market's already fallen significantly. They come out and pound their chest. I'm right. Meanwhile, saying the same thing back here in 2015, 2016. The election, how about the election in 2017, November? Trump was going to crash the market. This market is built on hot air and nothing else. Well, who cares? Let's bet against the market because we think it's manipulated by the Federal Reserve and central banks, right? But we know it's going higher. It's like, well, the central bank is going to prop up asset prices. Let me short it because I just don't think it's the right move. Well, the right move is going low in the market. If you think asset prices are being manipulated to the upside, why would you short it? I mean, it's kind of... Anyway, so let's move on to some charts here. I really like Square setting up. look at this wonderful bull flag here on a long-term weekly perspective. And if you look here on a shorter time frame, you just pull it up, and the recent consolidation really mirrors a lot of consolidations we've seen for Square. Square, we're pulling back, consolidated, and then move to the upside. Pull back, consolidated, move to the upside. Pull back, consolidated, move to the upside. So here we are. We've pulled back, consolidated, upside, pull back, consolidated, upside. But ultimately, this nice bull flag also is coming through, and if you want to pull it up, tightening ranges here. We're about to break out of this wedge to the upside. If you look like it's a stock like PayPal that recently broke out to new highs, I think Square is going to follow in its footsteps. PayPal up over the 108 level, new all-time highs on Friday. Another chart to look at, Google, which I think looks really sharp here out of all of the FANG. Negated that possible head and shoulders topping pattern for Google. Facebook also broke up over 180 last week, but if you look at Google here, nice little candle on Friday. Did not get as big a move I thought was going to happen. Of course, closed just about at session highs, but breakout to new all-time record highs possibly this week for Google. A $50 move to the upside, something I'll be looking for in a name like Faceback. Give me that Faceback. If you look at Facebook, a nice breakout to the upside. Looks like that 200 level. And if you look at the earnings gap, wow, last summer, and really that foreshadowed the move we had to the downside in October. But if you look at Facebook, possible closing of some of that earnings gap down, that massive move to the downside for Facebook. Something to keep an eye on. All right, the market's going to open soon. I'm already into this video, a couple minutes, and if you look there, I like Square. Going to get some calls. I got some lotto calls last week. The 77 calls for 7 cents. I'm going to look probably closer to the money for this week because I think Square is going to break up possibly into the 80s this week, and that'd be something I'm going to trade for. Some other stocks to watch: the financials, Citigroup. Pull up a chart. We saw a lot of bullish action in the XLF, the financial ETF. But if you look at a stock like Citi, despite what its earnings reaction is this morning, a nice bull flag to the upside, looking at the low 70s here for Citigroup. JP Morgan Chase broke out on earnings last week, also setting up for a move at about 115 this week. All right, UPBOptionMillionaires.com. I'll see you in the chat room.